Let's quickly check in on Wall Street, where we did point out to you a short while ago that the market there is trading in the green, but only very marginally. There is somewhere this hope among traders on Wall Street that politicians on both sides, the Republicans and the Democrats, will somewhere arrive at some sort of a resolution on the fiscal cliff and set things right before the year is out. So that's the one big factor that's helping the market stay very marginally in the green, but that negative sentiment continues to overweigh or overbear on the markets, and that's the reason you are seeing gains fairly limited. It's pretty much the same story in Europe.
All right, for a view on the international markets, we are joined by Julian Mayo, who is the co-CIO at Charlemagne Capital, who's joining us from London. Good to have you on the show, Julian. I want to get your view on India first. Part of the recent run-up was due to the government's reform push, and part was thanks to the huge inflows that India witnessed. Now, do you think that India will continue to attract inflows in growth-starved economy?
Well, India has been, I guess, neglected by a lot of investors until relatively recently. It's had this great run very recently, and as a result has been one of the best performing markets this year. But I think it's a matter of waiting for the evidence that the reforms that have been announced actually start to come through. There are obviously a lot of vested interests and there's a lot of inertia in India, which could mean that some of these reforms happen either much more slowly than expected or don't happen at all. And I think investors are going to play a sort of wait-and-see attitude in the short term to see whether the effects of those reforms actually come through. But if they do, then I think that could be very positive for Indian investments.
Julian, what about global challenges? Do you see any risk to the US falling off the cliff?
We don't look at the US market per se, but it seems to me, as a sort of specialist in emerging markets who's kind of observing the US from across the Atlantic, it seems inconceivable that some deal won't be cobbled together, and so the short answer is I think no. I don't think there is a significant risk that the US does fall over the fiscal cliff, because you've got 300 million people in America, most of whom are relatively intelligent, and I can't believe that the economic structure and infrastructure in America will allow such a stupid thing to happen.
And Julian, talking about India again, between Eurozone and fiscal cliff, which could be a bigger problem for India?
Well, I think as far as India is concerned, it really depends on the trading patterns and so on. I mean, India does not really depend. India is a relatively big domestic economy, and is relatively less exposed towards trade. I think globally the Eurozone is by far the bigger crisis. As I said earlier, I don't believe the US is going to fall sort of lemming-like over the cliff, whereas the Eurozone problems is literally insolvable, and I think the crisis in the Eurozone will continue for at least 5 years from now.